And my name is Ryan Milhollin. I'm with University of Missouri Extension. I work kind of as an ag business specialist in Columbia, Missouri. So given that we're in tax season and taxes are upon us, we thought this might be a good kind of opportunity to talk to folks that maybe they are having to get ready for their filling out their farm taxes this spring, or if it's folks that maybe not necessarily have ever or maybe just starting to farm, kind of understand the basics of farm taxes and what goes into it. So we're gonna kind of walk through some things to kind of hopefully get everybody up to speed and everybody kind of thinking about, how this applies to my farm or my potential operation. So to kind of start off, give you kind of a, where do we start? What do we want you to get out of this? We really want you to kind of identify and understand kind of the income side of it and also the expense side of what's in the Schedule F tax form. So when you're filling out your tax information. So I start this off with a disclosure that the first thing is I'm a University of Missouri employee, and this is all for educational purposes. We do this because a lot of times, especially kind of in the ag business area, we tend to talk about a lot of legal, accounting, tax information. So I just want to make sure that everybody understands that I am not a professional in this area, but I do help educate in this area, and that you should always look to experts and legal advice from others that are professionals. But my job is to kind of help you kind of understand some of the key things. So as you engage with some of these different people and that you'll be better prepared to talk with them. So, but just want to kind of put that out up front. So we kind of want to switch gears here and kind of talk a little bit about, what's in that tax form. So a lot of times people are kind of familiar with when we start talking about the 1040 tax form that you may have had to done, as an individual, or maybe you have to do with your business. It's like, how does all these pieces kind of fit together in the mix? So, kind of on the top side of this graph, we've got the, W-2 income. So if you've got a job somewhere and you get a W-2 from your job, that information, fits right into your 1040 tax form. So that's one component of it. If we go kind of down to the bottom left there, we have what's called the Schedule F. And that's what we're going to kind of talk a little bit more about today is, farming activities and how that fits into your tax return. So that's what the Schedule F is really focused on is the farming side of things, and where you'll put your income expenses for your farming enterprise into that schedule. Sometimes there's things that from the farming enterprise that might turn into things in the Schedule C. So maybe you take some of your produce or products and make different types of manufactured products. So Schedule C kind of fits into a place where people can kind of put their business related income expenses, things that aren't necessarily farming, but kind of fit into another type of small business area of the tax return. Sometimes there's things that go into kind of the green cloud there, Schedule E. This could be like a lot of times farm rental payments and things. So maybe you rent out some of your farmland to somebody else, or maybe you get, or vice versa. Those kind of things kind of fit into the Schedule E. Schedule A kind of go when people do itemized deductions. Maybe not as much anymore since the standard deduction is a lot higher, but sometimes people do itemize their deductions in their tax return. But just want to kind of give people a sense of, these are the different kind of areas in a tax return. And today we're going to kind of focus on more on just the farming side of it, what goes into the Schedule F. So a lot of times, and I think I talked a little bit about this on the slide before, but, somebody that's very diversified in farming, how does things fit in? Generally when we talk about like what are farming activities, we tend to refer things that means you're growing and selling products in kind of what we call an unmanufactured state. So if you kind of look here on the bottom side or the left-hand side of this table here, for things that might fit, better into a Schedule F for farming activities, growing fruits and vegetables, but not processing them at all. So maybe you're selling them at a local farmer's market or selling them to a grocery store or some other retailer out there as well. Same thing with like honey, mushrooms, tree nuts, selling plants to those would all be considered farming activities. Things that might fit, on the Schedule C side of your tax return, maybe things what they call as non-farming activities. Maybe you're taking some of your tomatoes and you're making salsa. Maybe you're doing baked goods. Maybe you're making things like apple cider pickles. Maybe you're taking some of your produce and actually preparing it or cutting it in some way. Those kind of things tend to go on the Schedule C side of the tax return as well. We also get a lot of questions about agritourism. You know, maybe you have a pumpkin patch and maybe you're charging a fee to people and you're bringing that income. You know, those things don't necessarily are considered farming activities, at least in the IRS world. So those things will probably fit under the Schedule C side of it. But just want to kind of explain that it's not always cut and dry. Sometimes there's a gray area between of, you know, what goes to Schedule C and Schedule F. And sometimes you just need to talk to an accountant or somebody that's well versed in understanding income taxes to figure out for your situation. Just want to give everybody a sense of, you know, what Schedule F actually looks like, the actual IRS form. You can go to the IRS website and search for it, pull a copy of it. But this is actually what it actually looks like. So basically a 2-page document that you go through and put individual information about your operation and what types of products do you produce. You know, what kind of income do you have from the farm? Also, what kind of expenses from the farm and else. And I'll kind of walk through a little bit more in some of the other slides too. We'll kind of break down the schedule up a little bit to make it a little bit more digestible than looking at this big form here. But if you kind of zoom in to kind of the, you know, the top of it, of the Schedule F, you know, really kind of start out the basic things. It's putting your basic, you know, information about your name or and you know, potential social security number. If your business has a certain type of EIN number, you'd enter that information into as well. Sometimes the first thing is actually just putting on there of what your principal crop or activity is from farming. And for some, that's really easy. Maybe you just grow fruits and that's all you do. And maybe that's really easy to figure out, but for some others that may be very diversified, you know, what we encourage people is just trying to figure out what, you know, what the major or the biggest thing from a sales standpoint of, you know, what's bringing in the bulk of your income to kind of help you figure out what to identify as your principal crop and activity. On the bottom side of the slide, you can kind of see the different codes, you know, for crop production, animal production, also forestry and logging. That helps you identify like what the code you put in on that box B on your income tax form right there. So basically it's just some very general things in there as well. Keep in mind, it's not always clear cut and there's going to be some variation here as well, but so farming services for others. You know, that could be, for example, you know, maybe you're doing custom farming for somebody else. So maybe you're going to go in and till their land for them and they're going to pay you for that service. So it could be hiring somebody else to do work. So maybe, you know, maybe somebody's going to, you know, somebody to pay me to keep their hives. Yeah, exactly. So basically it's just a fee base for something. Sometimes we can call that, you know, like custom hire. You know, you're custom hiring somebody for doing that one way or the other. So and kind of give you a little closer snapshot of what the Schedule F income looks like. And I'll talk a little bit more in depth on this on the next slide, a little bit about what are some of the big buckets in here. But these are all the questions that it'll ask you, basically 9 different ones that kind of pop into the, you know, the farm income on the cash method. And I'll probably take a step back here. And while we're back on this slide, there's one thing I didn't explain, and I realized it on the next slide. But there's a box C on here called accounting method. And it's one thing you elect on your Schedule F. You basically pick either accounting on a cash basis or an accrual basis. And cash basis means like as income comes in during the calendar year, you know, the income comes in, the expenses come in, it's for when it actually happens. So when the transaction happens. So if you're doing cash-based accounting, which a lot of farmers are, but there's also some that do accrual. So, you know, people that may produce a crop, this would account for the planting, the expenses and the potential income of it on an accrual basis within when it actually happens. So that's one box that sometimes people have to understand what cash-based accounting is versus accrual-based accounting as well. So that's one box that I didn't discuss that I should have earlier. Now, as we go into kind of the cash method. So if you see that part 1 where it says farm income cash method. So these are the people that will put their information in here for the cash-based accounting. There's also another box for accrual. That's also on the Schedule F, but we're gonna probably mostly talk about the cash method. But so basically, any kind of sales that come in for livestock, produce, other things for the farming enterprises are either gonna be on box 1 or 2. Sometimes there's other payments come in. These may be government payments, these may be disaster payments, maybe you're a member of a cooperative. If those kind of incomes come in, those get reported on a Schedule F. Also, if you see the box 7, custom hire income. So maybe somebody's hiring you to do something for them. Kind of like the beekeeping. If somebody was hiring you to maintain their hives for them and paying you so much money, that would show up in box 7. And sometimes there's other income that's related to the farming enterprise as well. But this just kind of shows what the actual form looks like. But to kind of talk a little bit more of a breakdown here too, is there's 2 different boxes up there, and you probably saw the word purchased versus raised. There are some situations that people may buy something and turn around and resell it later on, still farming. Maybe they bought some little, calves, and then they turn around and sold those calves at a later stage when they're a little bit older. Or maybe they were buying plants and then growing them to a certain stage and then selling them later. So that's what it means by purchase. That if you actually purchase livestock or produce or plants or something, that would be the sales of it. Now, on the vice versa, the sales of raised livestock, produce, grains, or other products, meaning that you raised it from the start. You never purchased, anything from somebody else. Maybe you, planted your own seeds, grew your own crop. That's the only distinction between those 2 different lines in the Schedule F. Basically any kind of ag program, crop insurance, disaster payments get reported on Schedule F, that custom hire and other income. So just want to make sure everybody kind of understands what goes on the income side of the Schedule F. The expense side, and this is one that I think people understand income a lot more, but I think sometimes in farming, it's not always easy to understand exactly what all expenses people can deduct on a farm. But this is a snapshot of what the part 2 of the income tax return looks like. So all the different boxes. So from box 10 all the way through 32 of all the different expenses. And we'll walk through some of these and try to give some examples to people, because sometimes it's easier to see an example and understand how it would apply in here. But the one thing before I flip to the next slide, I want people to recognize is that sometimes there's farming costs, for ordinarily, doing business in farming that don't always fit into one of these categories. A lot of times farms that I work with and others work with, there's also box 32 that have other expenses that don't quite fit into something, maybe in one of these other categories. Just want everybody to kind of see the income tax form and kind of see what some of the different categories look like. And we'll kind of walk through some examples of some of these as well. Car and truck expenses. A lot of times we spend a lot of time trying to educate farmers about, maybe keeping a mileage log. Maybe you're using a personal vehicle. Maybe you're traveling to a farmer's market. Maybe you're traveling to pick up production supplies for your business, or maybe you're just traveling from your home to a farming location where you're farming at. Those are all deductible expenses on your income taxes, and it's just keeping track of mileage. And the IRS will actually have a rate that you can help offset some of your expense categories for any kind of car and truck expenses related to the farming activity. So like I said, keeping a mileage log that will definitely help in that category of keeping track of those expenses. Chemicals, this could be anything from fungicide, insecticide, herbicide, any kind of chemical related to the farming practices that you're doing. Maybe it's a miticide for like beekeeping or something as well. So those are all deductible expenses. Conservation expenses, maybe you had to put in some dollars or into the farming enterprise to help with improving some of the conservation expenses and keeping track of those expenses and putting those into your income tax return. Custom hire, maybe you have to hire somebody to do something. Maybe you have to hire an electrician to come in and wire up a greenhouse, or maybe you have to get some specialized expertise in to help on the operation to do some things. Keeping track of those expenses and recording those into your Schedule F, they're definitely expenses that you can deduct. Depreciation is a big one. And there's lots of different methods that the IRS has for depreciation. So when I mean depreciation, it means that you have some sort of asset for the business that, has a lifespan longer than 1 year. So think in terms of equipment, think in terms of greenhouses, things that are assets that may have a lifespan over multiple years. Well, the IRS allows you to elect, have depreciation on your income tax returns and write off those expenses as depreciation expenses. So let's just say you had a greenhouse and, you were allowed to elect it over a 10-year period and you spent, $10,000 on that greenhouse or whatever. They're gonna allow you to take a per year depreciation charge over the next 10 years on your tax returns. And write that off. And there's lots of different ways and methods for depreciation, and we're not gonna go into details, but, as you talk to the accountant, making sure that they understand what assets you have for the business, they can help you figure out what depreciation to elect. Feeds, fertilizers, limes, these are all definitely things that can be, put into your tax returns as expenses. If you're spending any dollars related to any kind of gas, fuel, oil, keeping track of those in your farm record keeping system, those are definitely expenses. Insurance, maybe you have business insurance, maybe you have, property insurance, any kind of insurance related to the business itself. In some cases, if you get large enough and maybe you want to offer health insurance, things like that, those are things that can be written into your IRS expenses as well. Interest, we heard a lot of talk about some of the different FSA programs on farm loans or other kind of commercial bank loans out there. So if you do have a loan against your farm or some of the information or some of the pieces of equipment on your farm, that interest is deductible on your income tax returns. Hired labor, so if you hire people to work on your operation, maybe part-time or full-time, those all fit in. If you have any kind of rents or leases, maybe you have to rent a facility to have your farming enterprise. Maybe it's controlled environment ag. Those costs for any kind of rent or lease are deductible as well. And also any kind of repairs or maintenance. Those all kind of fit in the bucket of what can be put on a Schedule F and be written off as an expense. Kind of on the last set of expenses here that kind of fall in the Schedule F, seeds and plants. So those all definitely fit in. Any kind of farming supplies related to the farming enterprise that you're buying and keeping track of, those fit in. Taxes, these could be any kind of business taxes that come into play that related to your business. Those are things that come into the Schedule F. Utilities, so if you're able to separate kind of your personal utilities from your business utilities, anything related to water, electricity, other utilities related to the business enterprise, those all fit in. If you have animals, if you have to hire a veterinarian, if have them help with the animals that you have, medicine, if you're having them doing any specialized services, those things fit into a Schedule F and our expenses. And then last is kind of the other expenses. And I would tell people, just keep in mind that, it could be a subscription to a farming publication that helps keep you up to speed on technology or horticulture. There's lots of different things that you just have to think about it. Did this help me, kind of doing my business in farming? And if there's ever a question, asking an accountant or a tax professional too, this will qualify. But oftentimes we feel like there's lots of things I think people leave on the table and don't realize that are deductible expenses on their tax return. So kind of in our world of kind of the ag business world, we also often tell people, there's lots of expenses you can focus on your farming enterprise, but the big ones are the ones that you really definitely want to make sure you keep an eye on. And cost containment, keeping an eye on those from year to year, see how they change, how do they fluctuate? What are the big expenses that could hurt the business a lot? So we always tell people to really pay attention to those closely to make sure you kind of be profitable. So why is Schedule F important? Why do we spend this time talking about it? And probably the biggest one to start off with is making sure everybody gets the benefit, deductions, credits to minimize their tax liability. make sure that they're not leaving something on the table that they're forgetting about that should have been included on their tax return when they're trying to figure out how much tax that they're going to owe for their business or themselves personally too. So keep in mind that all kind of flows into the same, depending on if they're you know, a business or a corporation, which is be a little bit different. But also want to stress that farming has a lot of tax advantages that other businesses don't get. There's things like sales tax exemptions, you know, the depreciation advantages that you're able to, you know, use that on your income taxes to minimize, you know, those things. And also, I think just having a really large pool of deductible expenses for farming. You know, keep those all in mind. Try to understand which ones, you know, may fit into your situation. The last thing, and this kind of ties back to what a lot of our FSA folks have kind of talked about too, is you know, tax returns really help kind of document, you know, financial performance and farming activities. A lot of times when I work with producers, it's easy to kind of go through the tax returns and see trends and see what, you know, what does it look like, you know, over multiple years, and try to make adjustments in future years if they're wanting to try to make some improvements, or you can kind of understand, you know, I want to make a change. How is it going to impact me? It also helps kind of document and helps qualify you for government programs. Having that, you know, that track record of Schedule F history, it kind of helps you build credit in the farming world. It can also help when, you know, if you go to lenders and ask for a loan, you know, those are kind of things that they're going to be asking for, that maybe you're ready to scale up your farming business at that point. And also, I think it also helps people understand your kind of farm's profitability. You can take the pieces of the Schedule F out, you know, from your farm record keeping systems and kind of look at, you know, what's the overall farm's profitability, and then kind of understand from a year-to-year basis and either keep things going or make some changes in future years.